Good morning, Brock. Hi, everyone. How's everyone doing? Arena, good turnaround Tuesday to you. I'm doing okay. I hope you're doing fine. Hope everyone's doing fine. We root for everyone here at Forex Analytics. You're like our family. So I thought I'd start off with crude. Hi, everyone. Barry, nice to meet you. Hugo, Sinatra, all my trading warrior brothers and sisters. How are you? So, last week there was some discussion about a third drive in crude. I didn't think we were there because of all of this momentum, but this certainly is starting to look like one right here on the 4-hour time frame. We're not confirming these highs on the 2-hour time frame. You could take a picture if you want a screenshot of both the RSI and the crude. So we haven't had a confirmed high in since February 20. Okay, only a couple days ago. On the 4-hour, you could even see it on the 2 that we're not above 70. We tried 70, we weren't able to do it. So just something for you guys to consider. It's pretty classic looking here. Also, I'm of the opinion that this is pretty overdone, e.g., and way overdue for some correction. I'm not saying that today's the day, but for us to be able to rally back to 87.40, and when you look at this big break that we've had here in EG, it's been a huge break from, let's call it 600 pips. So, 38% retracement from wherever the lows come in, if it's today or we're still going to work lower. There's nothing in the RSI on the daily. It's pretty negative. So at the most, I'd look for a bear market rally, maybe back to 87 and a half, a little Ponce. And this was a major breakdown right here, right at around 87.80. What's this low here? Okay, so right in this level, this big support level that finally gave way. So we'll see if that happens. And I wanted to give you guys the big picture in gold. So here it is. To me, it looks like a descending triangle. Yesterday's low held this low back from in December before we had a big rally up to here. A lot of people had trend lines and showed this as a breakout. This is almost a $200 formation from the high of the move at 2048, whatever it was, maybe 180 bucks. But it's hard for me to believe what the targets would be, but measures under a 1600 handle on a breakdown. That would be the measured move off a formation like this. So gold bulls, be very careful if we take out 1757. This was my target for a long time, 1680, and might be a good place to take something in, but this is a pretty big bearish formation. And on the other hand, remember this 1920 level was a high in 2011. So if we break out of this formation to the upside, and you have to be open to everything when you do this, right? WD Gann, if you don't learn how to change your mind, you won't have any change left. So, either way it comes out, we could have a huge move. So if this is just a big consolidation and we get a breakout over 1920, that would be very bullish. I think that we'll have trouble here at around the 18 and a half level over these moving averages that are converging here on the daily. They're almost the same price, so this should be resistance on any further strength in the gold market. We're finally having at least the signs of some type of high in cable. I know it's been leading the way, and that's part of the reason for looking for a bottom in euro pound. But as you could see, even though we made new highs last night, it wasn't confirmed on the 2. It really, we've been diverging for quite some time all the way from this high. So, I've tried it a few times before. I'm in it again from yesterday. I'm down some pips, but maybe it'll turn for me today. and we're getting pretty good follow through in the S&Ps, and the NASDAQ was really the home run ball, wasn't it? So, last week when we were up here, Blake was talking about Apple breaking down. And then, up here on Friday, he was talking about how USD MEX should have been making new lows, and it wasn't. It was making higher lows, and that was a great market tell. I know I talked about it yesterday, but these kind of turning points don't happen every day. So, to me, it looks like we have a pretty good turn. 3,800 is still the measured move. I know we got back over this neckline, probably shook some people out, and we're at some support here. And you know what else is happening today? Jay Powell's going to be talking for 2 days. So, trade lightly. There could be some pretty, aberrational, volatile moves during his testimony if he says the one right word or one wrong word. So that's how sensitive the markets are. I actually think that the main point of what he's going to say today is going to be about fiscal stimulus, which Congress, I believe at least the House of Representatives, is ready to vote on and do something by the end of the week. We talked about it. So maybe with the market under pressure, politicians will do something, although it hasn't been that much of a drop where people are going to be, shaken up yet. That would probably happen much lower. So that's my take. And I'm going to bring Blake in.
Hey, Coach, how's it going?
Hey, good, buddy. How are you?
Hey, good. I just want to make sure. Edward Dowd is the guy that you're bringing in today, the guest,
Yeah,
right?
yeah.
We had his Twitter handle incorrect, and I just want to make sure this is the right Twitter handle. I'll show you, and I'm pretty sure it is.
Here he is. The
Yep,
obsolete man, and it's
yep,
at Dowd Edward.
yep. And he's coming in today, and so I'm gonna make that correction on our Twitter. Our
Okay.
our Twitter admin actually sent out the wrong tweet handle, and I'm like, no, that's not him. That's Edward Dowd. I'm not Edward Dow. So anyway,
Yeah. Okay.
I
Thank
just
you, Blake.
I sent up an update because our guy that's in Europe that does a lot of our social media stuff. He accidentally put the wrong handle in.
Okay.
So
I don't think Ed's going to mind much because it's a pretty humble guy that after his name, he says the obsolete man. Well, there's a guy being 67 years old, I understand the word obsolete, buddy. So anyway,
like,
I'm
do
look.
you even matter? You're just a
Yeah,
speck of dust in the wind.
someone
That's
that
it.
didn't, really, grasp crypto and watch fortunes being made and what's a SPAC and all these new things that are in the market. And I'm still looking at legacy markets while grinding it out while people are just getting rich on windfall moves.
Yeah, I
So
know. And well,
I'm obsolete, bro.
let's discuss a little bit those windfall moves because
Yeah.
Bitcoin actually just took a slump.
Yesterday. Yeah.
Yesterday we had a good move, and then today we had a move into lower lows below the 38% retracement. Now, this is the analysis. Forex analytics people already got this analysis already. I just said that twice. But the breakout point here is going to be really important. It comes in around 42,000. So, and it's just below the 50% retracement. So I wouldn't get too terribly excited about the moves that we're seeing. This is just kind of shaking out some weak hands, but it is worth noting because, it's I mean, the excitement around cryptocurrency right now is, I want to say, not out of control, but it is almost out of control. So you've got, pretty extreme optimism there, and that gets a little scary when you get in those, these types of situations. I'm not saying it's going to go down. Look, I've been bullish Bitcoin since we were at the $3,000-$4,000 level, and I'm just, I kick myself in the ass
Me too, buddy.
every single day for not buying it, and but I don't trade it. It was one of those things that I was just going to put it away for my kids, and I wanted it to go a little bit lower, and then every day passed, I'm like, I should be buying some, and then and then you just forget about it. And anyway, it's woulda, shoulda, coulda.
Yeah.
Anyway, I still think Bitcoin looks great longer term. I would be really careful about trying to chase it up at these levels. The excitement around it, like I said, is a little, is it warranted, unwarranted? I'm not the person to really make that judgment, but I will tell you that technically we're a little, little overdone. I think ultimately, and I'll stop here for a second and I'll let you guys comment, is I'd love to see us break back below the 200-day moving average, consolidate around the, high 20, low $30,000 range and consolidate there for a while and then see what happens. But the last thing I need to say about cryptocurrency is it is a sentiment driven asset. So as it's coming down, you have to be careful with stocks. You have to be careful with the Aussie. You have to be careful with commodities. My edge chart of the day yesterday was copper. Copper's down right now, but this is becoming a big risk for risk assets. It's not just, it's not the commodity super cycle and not just the commodity super cycle. It's crypto super cycle. It's everything not dollar related super cycle. It's stock market super cycle. We're going to have recovery. We're going to come out of our shoes. We're going to grow it 40%. We're going to have PE ratios of over 100 and, GDP of 20% a year annually for the next 400 years because of all this money that's built up, because of COVID. I'm being very sarcastic right now, but you guys get the drift that the point I'm trying to make is there's a lot of excitement, but I have to also say there's a lot priced in right now. So anyway, I had to get that off my chest, and we are, everything's at a lot of extremes right now. Stelios, were you going to say something, or Dale, were you going to say something?
Oh, no, just you're the easy money. You have what hasn't gone up?
Yeah. I mean, everything's gone up, and Martin says another 5% down pre-market Tesla. I mean, Tesla's down. Apple. Did you guys see Apple? Well, here's Apple. We are. Let's see where
Great
we're
call,
at.
Blake.
Well, we're now below the neckline of the head and shoulder pattern. We are below the trend line. This is a big deal. I know I sound like a broken record for the last, 4 or 5 days as soon as we broke this trend line. And you guys, even if you follow me on Twitter and you don't even listen here normally every day, you saw the tweet when we broke through there. And I'm like, should be watching Apple. This is the largest company in the world. And technically it's breaking down. So, and I'm not saying that, Apple's going to 50, but it looks like it's going from the 120s to maybe back to 100, maybe the 200-day moving average.
Yeah.
I mean, it's not like you're asking for a lot here. I'm just saying that when that starts to happen, you got to pull back in Apple. You got, Tesla's down. Tesla's getting crushed right now. I mean, we're coming off some pretty key levels here, and Tesla and Bitcoin, that's going hand in hand. You guys understand that, right? It's like, wouldn't that be something?
Well, Musk bought a lot of Bitcoin. I think some of the upside recently was that he was making money on Bitcoin.
Well, no,
that's what I've heard.
Announced that he bought Bitcoin or spent 1.5 billion, I think, in there, whatever, bought Bitcoin. That was like around here. But what you're going to see is the stock that's, tied to Bitcoin too now. So just like there's another, what's the
Hecla
other?
Mining did it too, a silver company. There's a lot of companies.
A lot of companies that put their balance sheets to work in cryptocurrency. There's one that, a company that hasn't even made a whole lot of money that, oh God, I can't think of the name right now. Some of you guys might be able to remember, but anyway, there's a company that's completely tied to Bitcoin now.
There it is. Brock has it. MicroStrategy.
Yeah, MSTR. Is that what it is? MSTR. MicroStrategy. Yeah. You know, pre-market, yeah, we're coming down. Whoa, why are we coming down? Well, because Bitcoin's coming down. This company doesn't even make money, you know, and it's just moving with Bitcoin. That's that's a scary thing. But
Yeah.
wouldn't that be something? I'm just I just got I'm gonna say this, but I don't believe it. I'm just saying, wouldn't that be something if Bitcoin, like all the, like, you know, something happened where, you know, taxation, regulation, uh crypto holders couldn't get away from it, cryptocurrency just slumped to, like, you know, I'd say nothing, but, like, you know, it slumps back to like $1,000 and, you know, there's no more interest in Bitcoin ever. You know what I mean? Let's say that something like that happens and then Tesla, you know, completely craters, and then, you know, it becomes just a normal car company like General Motors or Toyota or whatever else, you know. And you guys don't know. I've been around now for a lot less than Dale.
I knew that was coming.
Yeah.
I was just waiting. Anytime we start talking about age, I know I'm about to be
yeah, I got my
mentioned.
Series 7 in 1995, and I started trading for a living in end of 96, early 97. So it's been,
Yeah.
you know, obviously about 25 years that I've been trading.
I should have retired back then.
Yeah, you should have been retired. Hell, I mean, you had great grandkids at that point, and
Yeah.
I'm just kidding. But what I'm trying to say is that that I've seen a lot of crazy things in the market, and I know you've seen a lot of crazy things in the market. Stelios is actually a year older than me, and way more bald. And Stelios, you've seen a lot of stuff in the market too. I mean,
he's merciless today, huh?
And I traded through the 2008 crisis at the bank, and it was heavy. I was at Merrill Lynch at the time, and we were just about a day away from going bust. So
yeah, I mean, look, we've seen a lot of crazy things in our experience as market participants. You know, Dale, Stelios, myself, the rest of our team. I'm going to tell you guys, if you don't think it can happen, it can. Whatever you don't think can happen, it can. Just imagine, like, oh, there is no way Tesla, you know, becomes just a, you know, priced as a normal car company, like the same market cap as General Motors. I mean, what is the difference between Tesla and General Motors nowadays? Market cap wise, I mean, percentage wise. Somebody that follows the stocks got to know.
It's worth
how
so
many
much
times
more.
past market cap. If you don't think that can't happen, it can. I'm not saying it's going to happen. It can. It is possible. Anything's possible in the markets. That's the point I'm trying to make. Now, let me talk about a couple of things really quick. And Stelios, maybe you can jump in here, and Dale, you too, before Ed gets here. We have Powell speaking today, and Dale, you made a great point, and I want to reiterate what Dale said here. And I'm going to talk about Aussie. I'm going to talk about copper, and I just want and I'm going to leave it. I'm going to leave these charts up right here. Okay, commodity super cycle, yada yada yada. Aussie's breaking out. We're above 78 cents, and we're just ripping. Copper is at the 161% extension, just ripping. Everybody today expects Powell not to be hawkish. He's going to be dovish. He's going to be, his statement's already out. He's not, it's more of the questions and what, the legislature or the Senate Banking Committee, I believe it's Senate Banking Committee today. Let me just confirm that. That is at the Senate Banking Committee today, and then tomorrow will be the House Oversight. I think House
used to be called Humphrey Hawkins.
House, yeah, this used to be the Humphrey Hawkins, correct? But this is his semi-annual, and he's going to be quizzed a lot today. It's going to be a long day. We got to listen to all the questions and answers. He's going to be questioned about inflation. He's going to get questions about cryptocurrency. He's going to get questions about the rise in yields and what the impacts are there. He's going to be asked about a lot of the fluff in the market, the extremes, stocks at all-time highs, yet unemployment's high? How do we have a recovery when there's, so many jobs are lost? And he's going to have to explain that's mostly service sector jobs. And, there's going to be a lot of things that he will say and he'll have to answer to. And Dale is exactly right. He could say one word that completely alters how people trade this market. One thing, one slip up, one word can completely upend everything that we're doing right now.
Yeah, he's going to be pitching the COVID relief that we need fiscal. It can't all be the Fed.
Right. That's exactly right. And great point, Dale. I mean, we have the stimulus bill that's going it's going to the Senate right now.
Congress by the end of the week, and then Senate. So first in the House of Representatives, I believe.
And it's going to the House, and I doubt it's going to be able to pass there the way it stands right now, right? With the minimum wage increase and
he's going to have to give up that.
So there's going to have to be concessions, but he's going to reiterate that there's only so much they can do,
right?
And we got to get fiscal stimulus, and so there's going to be a lot of things. We probably know everything he's going to say, and we can reiterate it, but the fact of the matter is he can say something that may, whether he just sounds a little bit more hawkish and less dovish. His tone, his demeanor. And the reason why I'm pointing this out is I know my chart of the day yesterday was copper. If you get here, let me just show you what just so you guys can see what the DSI looks like. Well, I don't have to pull it up. It's buried in my charts here. But the DSI for copper, 2 days in a row, that would be Friday and yesterday, Monday at the end of the day. The DSI ranked at 93. Now, I've been looking at daily sentiment index for a long time. Whenever you get above 90 or below 10, you just don't stay there that long. That means there's extreme bullishness in copper being 93 and extreme bearishness when you're below 10. And right now copper's registered 2 days above 90. And, even when we get into the high 80s, I start to get a little weary, but man, when you're in the 90s and especially like 93, you very rarely see numbers at those levels, and they don't stay that long. So you've got copper that is at the big golden fib since the lows. And you could say, oh, hey, we got a commodity super cycle. Yeah. Do you think that's not priced into the market right now? After 115% move in less than a year, are you going to tell me that none of that's priced in?
Yeah, a lot of it is.
A lot of it, if not all of it. I mean, here's the thing. Remember, the analysts that are telling you that the super cycle is happening is selling you the idea because they already own it. They bought copper on the breakout of 320. They got caught short and reversed their positions at 260, and now here they are at 380. They've owned it all the way up, and they're like, oh, commodity super cycle. And you're like, oh yeah, commodity super cycle, I'm buying. And then, who's selling it to you?
Yeah.
Right.
Yeah. We might have a continuation of the bull market, but you know what? But we could have a correction first to shake out the people that came late to the party.
Exactly. And the whole thing is, look, I've told you guys this, I'm very bullish to Aussie. I'm not bullish right where we're at. I mean, it's not saying that it can't go higher. I just, for me, I'm not going to be a buyer up here. I'm not going to get sucked in here. I was hoping that this, flag would be more corrective down to the mid 70s to buy it down there, but it's just, obviously we pushed to new highs, but everything's divergent. Relative strength is divergent. And the one thing that I got to mention, and then I need Stelios to chime in here if he wants, and I got to leave some room up for him. Sorry, Stel. We got a lot of talking to do today anyway. There's, with copper breaking out, with stocks looking a little weaker, and if you guys missed it, we have a head and shoulder pattern that's trying to play out, but we just hit the 38% retracement, so don't get too excited about this head and shoulder pattern yet. because we're holding support. That's, we could end up being a false breakdown here. But the point I'm trying to make is there's a lot of extremes out there. And if we start to, if Powell makes one hiccup, it would be, you could see a bit of a move. And then also, there's a lot of these SPACs that are the SPACs that are coming off today, right?
I don't know, actually.
Taking there. Yeah.
I don't even know what they are.
It's these special purpose vehicles. I mean, they're just basically grouping a bunch of private companies together so investors can be involved in those versus going public. And
you tell me what business experience Paul Ryan has to have a spec.
Well,
he's a SPAC.
It's putting together a bunch of different, bunch of different people, and companies coming together to support, like,
Bubblicious.
It's just a different way of raising money. And they're it's like taking shell companies basically and wrapping it up in a private company underneath the shell company. So this way you don't have to go through the
pay the money. It's a cheap way to raise money.
It's a cheap way to raise money. It's a cheap way to go public. And this is not an uncommon thing. People did this back in the .com bubble too.
Oh, I didn't know. Oh, yeah. Okay.
So
there's a parallel.
The problem is this is a byproduct of easy money, and then we have this SPAC that's getting crushed. I forget what the symbol was yesterday, but yeah, it's weighing on sentiment. It's all these things. Whether you're talking about Bitcoin, you're talking about the commodity, moves. Anyway, it's a lot of risk out there. So, Stelios, sorry, what do you got to say?
It's okay. You said everything. No, I'm kidding. Actually, to answer your question, GM is about 75 billion cap, and Tesla was 700. It's going to be a bit less now, but still, it's incredible, right?
So it's how many times?
10 times, nearly
how
10
many?
times. Let's say 9 times.
Okay, look, Tesla created, basically really created the electric vehicle. And, I always try to think back, like what broke out, the stock market, and usually when you see these big breakouts, like you have to go back to like 2000 and, usually it's some sort of innovation. So one of the reasons why I believe the stock market broke out, where we're at right now and, well above, 2,500 is because of the adoption of electric vehicles. It's always been like an idea, but Tesla's really, it's been the forefront. And I believe Tesla will always have a premium as a car manufacturer based on it bringing electric vehicles to the masses in a fun and great technology way. But does it deserve to be 10 times the size of General Motors? I don't know. Especially based on how big
their slice of the pie is basically, right? How many cars?
Yeah, exactly.
Which is tiny. Yeah. I have quite a few friends who are car collectors and car freaks, and they all say the same thing. It just makes no sense. The market is pricing that Tesla is going to dominate the car market in the next 10 years. They were the first mover. But, usually in things like that, the first mover prepares the market for what's coming, and then somebody else comes and brings a better product, which is already happening. But anyway.
Yeah. And I mean, I don't follow the electric vehicle market much because I'm a fossil fuel car kind of guy. So are you, Stelios. I know that.
I am.
Although I don't think that Teslas are not cool. I almost everybody I know owns a Tesla, it seems like. But the fact of the matter is that I don't follow it, but I know that there's like Ford just made their Mustang, and I watched a couple of review videos on that versus Tesla, and I mean I don't say it's a superior vehicle, but it definitely will take some of the market share. You know what I mean? Especially at the price points that they're, versus a Tesla versus these, new electric vehicles that are coming to market. So I don't believe that Tesla can completely dominate with other players coming in, right?
I agree with you. And let's not forget China, like Forrest Gall is saying, China is going to bring EVs to the world, NIO, whatever the name is. and all the others coming.
Yeah, and Georgie, you said it correctly. Tesla feels like the new Prius. And by the way, we had a Prius for literally 10 years. It was our extra vehicle for so many years. My wife, when she was getting her master's degree, she had to drive like, this is when gas was $5 a gallon. We had to get rid of one of our V8s because we literally would spend $500 a week in gas.
Wow.
Wow.
Yeah, it was like ranging between 425 and 475 a week in gas.
Yeah, that's a lot.
Yeah.
So we went and got a Prius. I was like, screw that. I took the brunt of that, by the way. I had to get rid of my V8, but whatever. I'm not bitter. But I'm just saying that, but having a Prius, I mean, you're right. It's Tesla right now seems like the Prius of, 10, 12, 13 years ago. So I agree with that. Anyway, hey guys, just remember Pal's testimony is today. It's going to be, it's an important one. It could be a market mover. For those of you that are on, that are Forex Analytics subscribers, in about 45 minutes, I'll see you there. Raj, I'll talk about SPACs when I get over there before I do the bias chart with you. We're actually fumbling a few things around today. Steve is out. He's going to be out for the remainder of the week. He'll be back. Don't worry, but he's out for the remainder of the week. So we're juggling a little bit over here, but I just want to say, if you guys haven't tried Forex Analytics, please do so. And it's only $1 for 10 days. And then you can listen to all the other webinars that we're on, going through the analysis process of all the FX majors and whatnot. But what's more important is, if you want to try to get Forex Analytics for free, visit our Forex sponsored page, Pepperstone Securities. We partnered with them. You can open an account right here with this link. You can get up to 4 months for free, depending on how much trading you do. You get 2 months, and then 2 months based on trading up to 500,000 in currency, which is just a couple small trades actually. And then you can get Forex Analytics for free by doing that. So we'll see you there. We'll see you in the chat rooms. We'll see you in the next webinars for our Forex Analytics subscribers. Stelios, I'll catch you later. Dale, have a great interview with Ed, and we'll
Thank you, Blake.
Thanks, guys.
Okay.
Thank you, Blake.
Welcome to Face, Edward. How are you?
Good. Can you hear me?
Yeah, I got you.
Excellent.
Nice to meet you.
Nice to see you again. Thanks for having me on. Appreciate
Oh,
it.
okay. So see, I have Alzheimer's. When was the last time that I call it old timers? How long's it been, Ed?
I think it was December or November.
Okay. All right. So Ed, remember how to share your screen here in Zoom?
Let me click share and then select a window. All right. Let me.
So I want to start off with something that you say on your Twitter account. Why an obsolete man?
That's recent due to all the censorship that's going on, and the fact that in the political realm, using logic and critical thinking seems to be a problem. It's from the old Zone series. There's an episode called The Obsolete Man where Rod Serling said,
I saw the video. Yeah.
Logic is an enemy and truth is a menace. It's just the times we're in where you say
you feel stressed out about these times like everyone else. I'm still waiting for you to share your screen, Ed.
I just clicked it, so now I got to share it. Oh, there we go.
There you go.
Am I there?
It said, "Yep, got it." Okay. So looks like you're showing the S&P. So can you just refresh my memory and the attendees a little bit about your background and how you got in trading?
Yeah, so I started off my career as a bond salesman, but then moved into equity. I was a growth portfolio manager for about 10 years at BlackRock, and then tried to start my own hedge fund. That didn't work out, and I've been trading my own money for the 4 or 5 years. And I work closely with Peter Campbell at MCM. He and I are buddies, and he lets me use his software, and we analyze the S&P 100. And we traded aggressively, both long and short, swings, day trades.
Okay.
So,
All right.
so I'll talk about the S&P today, and what we're thinking, and obviously, we got a Head and Shoulders. It just looks like it's trying to break down. The measured move of this is 2030. Kind of got there last night in ES 2840. We broke.
You mean 3840?
Yeah, 38. Yeah, sorry.
Yeah. I mean, you are, I know you're bearish now because you're thinking of a different angle. But there are some people that think we could go there, or to 3,000. But does this look just corrective to you?
Yeah. So
go ahead.
This is corrective. I think there may be an important top coming, but I don't think just quite yet. I mean, we broke down 3870, which was the shelf that it needed.
Right.
If we break 3800, that will get my attention. If we break 3700, then something's changed. So Peter and I are thinking that this is going to catch, and then we're going to have, if you're a bear, unfortunately, another move probably over the next 3 weeks, pretty quick into like the 4,000, 4,100 area. And primarily that's going to be because, like you said, Powell's speaking today. He's going to be dovish. He's going to emphasize the fiscal aspect of this.
Right.
It looks like we're going to get a decision on that around March 14th. So that's another 3 weeks. So we're guessing the market front run that, and then, it's a sell the news event, and the markets handle that.
So you think we'll go back up into the fiscal COVID rescue plan?
Correct.
And that'll be buy the rumor, sell the fact.
Correct. And look,
okay.
We all know the valuations are kooky. Blake talked about Tesla. Tesla broke its 50 DMA for the first time in months. It looks like a good break here, and it's got to follow through today. It broke it yesterday decisively, and it's breaking it again. It's getting some nice follow through today. It'll probably back test the 50 DMA in the subsequent rally we start to get the next day or two, depending upon where we go. But
what do you make out of NASDAQ really out, it led on the way up, and the percentage declines have been much greater to the downside in the last week?
Yeah, I mean, look, the NASDAQ is telling you something's starting to gel. I think, we're going to hear about economic recovery and rotation, and the market's going to try to levitate on rotation. But, we all know that most of the market cap is intact, and if those things really break down, the market's going to struggle. I don't care if the Russell 1000, is hitting new highs. That's just not going to be enough market cap eventually to levitate this. But, the thing to remember is last year, as we all know, M1, the money supply, M1 grew 65% annualized basis year over year. And we've never seen that before. And that's why we are where we are today. Now, let's think about what's going to happen as we start rolling through the calendar year. The second derivative of that increase in the money supply is going to start to roll over. And that's why the Fed is emphasizing the fiscal aspect of this. And I've talked to a couple hedge fund buddies that are really good at technical analysis, and they're getting worried about the second half of the year from a second derivative standpoint on the money supply and just economic growth starting to roll over from the COVID rebound.
So are you saying, Ed, in plain non-economist language, that the Fed with a second derivative is losing effectiveness, and that's why he's going hand in hand for fiscal stimulus, because the Fed feels like there's not much more they can do? What is the second derivative?
Correct. So basically, I mean, they just did 65% last year. To keep this thing floating, they need to do even, this is about flow. They need to keep the flow going of money supply. So what are they going to do another 80% this year? No. So they're going hat in hand, like you said, to the
Congress. Yeah.
And they need these guys to spend trillions of dollars. And if we get any kind of delay, or if it's mostly pork and it doesn't actually, get into the real economy, it's going to be a problem. It's going to be a problem.
Even if they do, let me ask you this: you're an old bond salesman. And I was actually correct about something, about rates rising since August when we had the turn in the 10-year. And I'm wondering why, and maybe you could explain it to me, why treasuries like TLT and ETF for the 20-year almost retraced the whole move from when the Fed stepped in on the COVID crash, yet corporates and junk have not suffered hardly at all. They've come off a little bit, but I mean, you look at TLT, it's almost 78.6, 88.3 of the whole rally from the COVID crash. So why, if they are buying bonds, why have yields increased so much more in treasuries instead of junk and corporates? Do you know?
Well, look, I think it's got a lot to do with just technicals. We've had this 30-year decline in yields, and I think
right.
kind of hit, and especially the long end, right? I mean, the Fed. I think what it's indicating is that the market's sniffing out the Fed is losing control eventually, and the long end is going to be the first place to move. And given the political uncertainty that seems to be going on in our country, I think that's also playing into this. I mean, people look, if you talk to a lot of people outside of this country, they looked at the election and they smelled something weird going on. And so even though, it's people don't like to talk about the election, and there's a lot of censorship about talking about the election results, people in other countries can vote with their feet. And the Fed, unprecedented money supply, 65%. I think the market, the bond guys always smell stuff before the equity folks and
but they've been on retirement for 30 years, so they finally the bond vigilantes are finally reappearing. It's the second coming of them.
I don't know if you know how this works. It's like I think the bond vigilantes are dead. I think what's happening is
they're my age. They're my age. At least some of them are biting the dust. Yeah, I know that.
What it usually happens is when you get the last bond vigilante to die or go away, you get a reversal, and it's just a natural thing where there's just no more buyers of long end treasury bonds, and then they become net sellers. And I think that's where we are. I think it's the Federal Reserve last year with this COVID crisis and all the moves they made are so unprecedented, and the political situation in the U.S. that has conspired to cause the long end to start to creep up. And that's always been my contention, that this whole equity bull market is in the credit markets. Eventually, the credit markets begin the end. And
okay.
And when you have the reserve currency long end, the U.S. dollar reserve currency, our long end starts to creep up. That's going to eventually affect other asset classes, primarily the equity market.
Valuations compresses them. So let me ask you this: do you think the dollar is a sacrificial lamb here? I mean, there's so much it's hard for people to come up with a bullish narrative for the dollar. Can you?
Yeah, I've always believed that if there is going to be an end to this madness, the dollar is actually going to pull people and have a huge rally. The dollar ends with an explosion up, and that's when we maybe have a different world currency. But in 2000 and 2008, the Federal Reserve flooded the world with dollars, and everybody borrowed dollars. So there's a huge amount of borrowing in dollars, and eventually, if there's a credit crisis and a true economic deterioration, the dollar is going to get called home, and that's going to cause the dollar to go up. Credit destruction actually causes the dollar to rise because we're the reserve currency. So we have some sort of solvency crisis or something along those lines. The dollar will sit out, and look, if you look at the dollar is like broke out of a trend line, a long-term trend line down from last year, and it's back testing it now. So
you have a picture of it?
Yeah, let me. Can I share? How do I share?
Just, you know, if the chart comes up on this screen, you just do it on this screen. If not, you know,
Let me move it over.
huh?
Yeah, let me pull up my dollar chart.
Okay. That's our bailiwick. So, so you're saying we broke out of a downtrend with this last rally we had to like 91.40?
Yeah,
Be
but
interesting to
now
see.
now we're back testing the downtrend with this most
Right.
recent rally. Can you see that now?
Yeah, got it, buddy.
Yeah,
Okay.
so there you see, so from April of last year, we had a downtrend. We broke out of it at the beginning of February. Now we're kind of back testing that green line I've drawn.
Okay.
And so I think we'll chop around here, and we're trying to put in a low in the dollar. That's what I
Yeah,
think.
this could be a higher low here with the whole world, you know, so bearish the dollar that, you know, I was thinking at least a bear market rally to 95, 96 was possible. Maybe it happens during this corrective phase in the S&Ps, but so far in the last couple of days with weakness in equities, we've seen really no bid in the dollar.
Correct.
Maybe today.
Yeah. So you look, the dollar, I think, is trying to put in a. I mean, the dollar has cycles to it, right? And you know, it's.
Yeah.
I think the dollar goes on a 3-year cycle, and maybe it's trying to put in a 3-year cycle low, and then it'll try to. We'll see if that rally is, you know, a left translated, you know, bearish counter trend rally, or if it's a right translated. We won't know until we start to see it. But you know, if this is going to end, the dollar is going to explode. But you know, I've tried calling tops too many times a couple of years ago, so I just go along and trade what I see. But right now I see a top coming in 3 weeks, and we'll see how important of a top it is. And I know people want to get bearish right now, but I wouldn't get too bearish right here, right now. I think we might have a little more weakness today. We might scare people and try to take the S&P down to 3,800 or maybe into the 3,700s, but I think it'll catch and then rally.
Okay. So you and Peter are thinking 4,100 on this next rally, maybe into April. I know there are a lot of important cycles due in April.
That's what we think. But you know, look, we're also, you know,
flexible.
Yeah, we're flexible, and if we really break down 3,700, something else is up, and we're not going to be looking to get long. But I mean, right now, you know, we were short a little bit the last couple of days, but you know, we're looking for a long here at some point.
Okay. Because I remember the last interview with Peter, he was looking for a high. I brought up April, and he said he didn't think it would. It had that much time in it. He was talking late January, early February, and but that was, you know, several months in advance. And he was talking, I think, 3850 for a number. When we were all, you know, we were 36 or so when he was saying that. So it was a great call.
Yeah, he's moved his targets up, as have I, and but we need to see a couple things before we get really bearish, and we haven't seen them yet. We need to see some, according to his sentiment work, some unconfirmed highs, which we haven't seen yet, and we need to see credit sentiment deteriorate, corporate credit. We haven't seen that yet, and we also need to see some Hindenburg omens, which we haven't had any of those yet. So we're thinking maybe into the middle of March, we'll see what the market looks like then, if it's higher.
Okay.
And so
around the spring equinox.
Yeah, an important top is coming, but you just don't want to front run it because, you know,
I know.
You know,
I think we all know. You know how many you think I didn't try and short a lot of divergences that got blown out. So yeah, it's but I finally did, you know, nail the high last week. So I'm interested in your look. Anything else that you and Peter you pay attention to on your own that you want to share with us today?
So let's also take a look at, let me grab the VIX.
Okay. I was thinking that, you know, during this period that maybe we could rally. There's a gap up around 29.
Yeah. So I'm just looking at the VIX curve.
Okay.
the VIX futures term structure. And right now it's positively sloped, and you really don't want to get too bearish when it looks like this.
Why?
That's telling you that things are not stressed out with the market makers and the volatility. And I'll start to get really concerned if this VIX futures curve flattens out or inverts. I've caught some nice tops watching this, and whenever you get an inversion at a high or new all-time high, it's about to implode. And we don't have that yet, so we might see an inversion, in 3 or 4 weeks. But right now, this term structure suggests to me that any kind of dip here will likely get bought to new highs. And
Okay, so the inversion, would that be
the March
Go ahead.
contract goes above,
like backwardation in futures, where the curve would show the front end being the strongest and the deferred being weaker? Is that what you're
Correct.
talking about?
That's what I'm talking about.
All right, that's like backwardation on commodity markets, where people will pay up for the front month and the
Correct.
back months are lower.
Yeah, and look, if you're looking, that's one of the tricks a lot of us use is if you're hitting new all-time highs and the VIX curve is getting flat and about to go into backwardation, something ominous is coming, and we don't have that yet. So this strikes me as just a garden variety mill pullback that'll get bought. I mean, I could be wrong, and if we invert in the next couple days, then something else is going on. But right now, this is a healthy looking term structure on the VIX.
Okay. I like your insights into the market very much, Ed, and I'm sure anyone listening to us or listens later to the recording would want to know how they could stay in touch with you and your opinions and your looks. Do you have a place where you would like to direct people?
Yeah, I'm on Twitter, and I talk to people that definitely come into my DMs. At Dowd Edward.
Right.
And, you should also follow my buddy Peter.
Yes. MCM.
At MCM_CT. He's got some great perspectives on the market, and he and I have been working together for about 2.5 years, and we've both learned together. We've learned to trust his tools more than our own opinions. I've become, as I'm sure this has happened to you too, Dale, with the central bank manipulation, you just trade what you see. Opinions are not worth that much. So,
yeah, and a lot of old things that used to work don't work. I mean, when copper was in a bear market, the things like all bull markets are roofed in copper. Well, it never really put on a roof, but it sure worked in the opposite way. So, you know what I mean, buddy?
Yep.
All right. Well, I amazing move in copper, amazing move in commodities. So, I guess, we're going to see, because most people are talking about the reflation trade. Do you think that a lot of that has already occurred, or is still embryonic?
If I'm looking and Peter's looking and for an important topic, equities, that suggests that the reflation trade's already played out, and that reflation trade started last.
Yeah.
There's two forces. I mean, the Fed's been fighting deflation since the great financial crisis, and
right.
Deflation trades over the last 10 years, and I'm guessing this is already priced in. I'm guessing the dollar is put in an important low. I'm guessing, as Blake was saying, copper's going to put in a top. May not be the final top, but a top. And so, it seems to me we're reaching some sort of inflection point over the next 2 to 4 weeks, where a lot of things are going to move around.
Okay, it's going to be an interesting period. And let me ask you this, Ed, when the vaccine is available to you, are you going to take it?
No, I don't take the flu shot. I'm I'm in fabulous shape for a guy my age. As I got older, I decided to take a hard look at my health, and I'm in the best shape of my life. And I think I've already been exposed to the virus, to be quite honest. I live on Maui, and a dirty little secret, the virus was here in the fall, and we didn't know it because everyone got sick on Maui in the fall. And then when we had the lockdown, no one got sick, even though we were exposed to 600,000 tourists between January and March. We really didn't have any cases, and it wasn't because of the lockdown. It was because it had already blown through Maui in the fall.
Okay, interesting. Well, thank you very much, my trading warrior brother. It was great to talk to you again. And excuse me, I've done so many of these sometimes, and when time goes by, I don't remember. So have mercy on someone, a senior citizen. Anyway, I appreciate
being on. Thank you for having me.
It was a great interview, Ed. Thanks so much for being with us today, and good hunting to you and Peter. Say hello for me.
Got it. Take care.
All right, everyone. Good luck the rest of Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And you could tune in to Blake as a member for the bias chart in about 19 minutes. And I'll see everyone tomorrow. You're welcome, Brock. People are thanking you, Ed. And I'm going to wrap it here. Adios, everyone. You're welcome, Hugo. See you, Warriors, tomorrow. Adios. You're welcome, Sonny.